All right, good morning, everyone. Today is March 12th, 2025, and back with another quick edition of the live show. And as you probably know, the CPI number came out this morning, and it was slightly better than expected, with theoretically, well, officially, the CPI number was 2.8% year over year inflation, which is interesting because it sounds good, but as you know, adding 2.8% on top of the increase in prices that we've seen over the past several years is just not all that great. So the funny thing is the the media has a way of convincing the public through sort of a play on words that if inflation's coming down, that's great news. If the rate of inflation is coming down, that's great news because people tend to think, in their subconscious, especially people that don't follow this stuff closely, they think, oh, prices are coming down. That's great. So the thing of it is if prices have increased significantly and then you only increase them a little bit more, it still compounds. See, that's what most people don't understand, and I guess, economists understand it, but they pretend not to because they don't want people to be upset about price increases, right? So it's all about the rate of inflation, and a 2.8% rate of inflation sounds good, and it probably sounds great to the Fed, but the fact of the matter is that everything got way more expensive, and so now it's only getting slightly more expensive, but prices are not coming down. So it will take a recession for prices to come down. Speaking of which, the funny thing is, as you know, we've had a huge market sell-off recently. Started off as like a little dip, and then basically at yesterday's lows was practically what they call a correction. And so the way that the way that I use the particular vernacular is like, 3 to 5% is a dip, 5 to 10% is a pullback, and 10% is a correction. And I think I haven't done the math on the intradays, but it was a little over 9%, maybe like 9.7% roughly as far as intraday high to low. So it is pretty close to a correction. And of course, today on the CPI number being slightly better than expected. If you think about it, though, the Fed's 2% inflation goal, it's been something like close to 4 years since the CPI came in at 2% year over year. So, but I digress. Real quick, I have one slide that I brought to the show this morning, and this kind of goes to what I was saying before. If you take the last 5 years here and just look at some of the prices here, just incredible over the last 5 years. And so if you think about it, like, if your car insurance is up 55% over the last 5 years, the idea that, it's only increasing by 2.8%, which is the funny thing is I see lots of people posting that their car insurance went up 10%, 20%, like way over the inflation rate. So, I mean, the kind of stuff, and see, this is the kind of stuff that, other than shelter and new cars and that, but a lot of the things like, say electricity and food, transportation, a lot of things you use all the time. I mean, car insurance, you pay car insurance every single month for your whole life, and so these kind of increases. The funny thing about eggs, like everyone likes to harp on eggs, but it's kind of ridiculous. I was at the grocery store yesterday, and a dozen eggs is about $6. So I don't buy a lot of eggs, but anyway, yeah, the whole thing, and I don't want to get hung up on talking about inflation, but it is CPI day, and that's pretty important because the market. the market's been selling off significantly, as I mentioned, almost in correction territory, and because of, a 0.1%, which is to me is a rounding error. And the other thing is that I firmly believe that the official CPI isn't a very accurate measure of the true cost of living. So, but there's some good news out there. The prices of some of the stuff that I buy haven't gone up in a long time, and so that's kind of how inflation works. Is when inflation slows down, the price increases happen less frequently, and they are less than when you're in, like, remember it was a couple of years ago, inflation peaked at like 9.1%. So anyway, I mean, this is what you're looking at here, and these prices are not going back down. See, that's the whole thing about inflation. Once you let that genie out of the bottle, and of course, as we've talked about here at length on this show over the years, is that the inflation is a direct result of an increase in money supply. And that's how it's worked all throughout history. And don't think that all these PhD economists that work at the Fed don't know that. They just pretend that, they like to pretend that they don't understand certain things, or they like to blame it on other things. But if you boil it all down, all throughout the history of the world and the money systems, um, inflation comes from printing money, increasing the money supply. That used to the definition of inflation back in the old days, pre-America days. The definition of inflation was an increase in the money supply, and the result of that was price increases, right? So inflation is inflation of the money supply. Anyway, let's move on to the market. So, as you know, as everybody knows, it's been the top story on the news the past couple of days on the NBC Nightly News has been the stock market sell-off due to tariffs. And the funny thing is that the other day, 2 days ago, I guess it would have been on Monday, the really big sell-off was all the news organizations and CNBC, on their big headline all day was that the market sell-off was based on fears of a recession fears. And so that's kind of interesting. And then, of course, there's always the recession fears and tariffs, right? And the whole tariff thing, geez, I don't know what to make of it, but fact of the matter is that this is a very extreme and significant sell-off simply because of how quickly it transpired, right? You guys remember? Let me switch to this other chart. Yeah, I got a couple other looks at the market here, but the weekly chart's actually my favorite at this point. But here's something interesting: is that this is the 200-day moving average. Right, there's the 50-day up there curling down. The market is extended from the 50-day moving average by like 3 standard deviations, which hasn't happened in a long time. I mean, last summer we had a pretty decent sell-off there, and it happened pretty quick. I mean, we got a little bit of a dip, and then 3 days. I don't even remember what that was about, to be honest with you. But if you look at where the 50-day was and the price, if you look at it now, it's extremely stretched. So anyway, what I wanted to bring your attention to was this RSI down here. Bring that RSI up. So the RSI, as of like yesterday, was the lowest it's been since way back in November of 2023. You can see a couple of times, October, November of 2023. That was a long time ago, since the RSI got below 30. So that's basically indicates the market is extremely oversold and most likely due for a bounce. But here's the funny thing is The funny thing is that this past Friday, let me zoom in here. Yeah, this is a chart I was looking for, but this past Friday right here. So we had this big sell down and then poked way below the 200 day here and the big kind of scary day, and then it was the big end of day rebound. And so going into the weekend, going into this past weekend, it seemed like literally everybody assumed that we were going to bounce right there. That was the prevailing and conventional wisdom, is that we were for sure going to bounce this week, based off of this. And of course, looking at it, you kind of would think the same thing, but the funny thing is, obviously you need to get over the previous day's high in order to, after sell off. I mean, that's just a little sort of technical rule of thumb is that let me get a little marker here. I'll explain what I mean. If you think about it, like going into this week. So here's Friday, and then going into this week, a little rule of thumb is that when you get an extreme or just significant sell-off of any kind, just waiting for a move above the high of the previous bar that you're looking at will prevent you from pulling the trigger too early. Right? And so, I mean, that's just a classic sort of a standard trading trick. Can work on just about any time frame. But anyway, and so, looking at it here now, obviously today, today's the first day, and if you look at these bars, in theory, and I guess you could do this based on the closing price, but if you go all the way back here, just look at the closes in relation to the previous day's price bar, and when you look for a close that was above the high of the previous bar, you don't see any on here, right? Even as of today. So like I'm looking at this, and of course, that could be a fake out too. Right? You could easily have like sort of a fake out and then continue the sell off. So, but the funny thing is, ever since this high, there has not been one single day that I can see here that the close was above the high of the previous day. You see that? So, this day was, you didn't even poke above, like right here, you didn't even poke above that high, right? And so even though it was a green candle, and you could say, well, the low was finding support at the 200 day, these couple of days. And so, a lot of times you look at a chart and you think, well, that looks like a reversal candle, but there you go. So there's Thursday, and then there's Friday. And so you can look at Friday, and boy, it sure did seem like with that big intraday sell down and then the rally, it sure did look like, there was a lot of potential for a reversal going into this week. But yeah, I saw somebody post the old adage, markets never bottom on a Friday, which I had forgot about that one, because I mean, literally last year the market spent the whole time just going up, and so anyways, Monday was just a brutal sell-off. It really was, and totally lost the 200-day moving average. So anyway, I thought I would mention that. So yesterday kind of looks like a nice potential pivot low, and there's every possibility that that yesterday marked like an interim low and we get a bounce. But it's clear to me and just about everyone else that that this is sort of a change in structure in the overall market here, this selling. And the funny thing is, you guys might remember this, like way back over here in this, we were trapped in this box for weeks, and I talked about the idea of it breaking out, making a new high, and then coming right back in the box. And so that was, especially after this huge consolidation, all the way from like, call it December into February, this sort of big giant consolidation. That little fake out breakout there is pretty insidious, honestly, because the market hit a new all-time high, and I'm sure that the prevailing sentiment at the time was extremely bullish because after all this consolidation, we were finally breaking out the new highs, right? And so that turned out to be the big fake out. So anyway, yeah, pretty amazing, really. This price action has been just insane. I mean, we haven't seen, well, I shouldn't say that because this big red candle here in December was all about the Fed, as you recall. This is when Powell threw cold water on the idea of, continuing to lower interest rates. And so, it's hard to know what's actually going on behind the scenes. In theory, if the market sells off enough, right? And I've seen people mention this concept, this idea. I don't know whether I buy it or not, but it's a plausible scenario. If the market sells off enough, then there'll be a rush to the safety of bonds, and if the market rallies bonds and interest rates come down by virtue of the market, then the Fed may be forced to lower rates, right? And so in theory, they could look at that 2.8% CPI number and say, well, we're getting pretty close to our 2% inflation goal, which, by the way, is ridiculous. 2%, 2% annual inflation is not really price stability. What I showed you before, 50% increase, 25 to 50% increases in your cost of living, stuff you buy all the time in a 5-year period, that's the opposite of price stability. And so, it all goes back to the Fed, and they even admitted this, but they admitted this one day, but obviously it wasn't the top story on the NBC Nightly News, that they overreacted during the pandemic. So from what I gather, from what I've read, they basically increased the money supply by like $7 trillion or something during the pandemic. And going back to what I said before, everybody knows that's, it's economics 101. If you have a certain amount of, money that exists, M2, I guess you would call it, and then you say, well, we got a crisis, so we're going to create $7 trillion out of thin air, it only makes sense that eventually that's going to turn into inflation. And so, but anyway, looking at the weekly chart here, we take this sucker back to the pandemic, right? So there you go. And so, basically everyone freaked out here for several weeks, and then the Fed said, well, we gotta act. Shutdowns and lockdowns and businesses closed and people not going to work and all that. So the Fed went crazy. They created $7 trillion. They just started throwing money out there and sending people checks and loans and all this stuff. And so all that money found its way into the market right there. And that was the direct result of the Fed once again saving the economy from a crisis. And then, of course, we had the year 2022 was a pretty rough year. That trend line broke, and then we got, a real sell-off. And that was the last real sell-off that we've had. And it was kind of nasty because it basically, persisted the entire year of 2022, right? And then, of course, the market formed this big gigantic cup and handle that we talked about over here, and then of course it was back off to the races after this sell-off here in October 2023. From summer into October, we got this rally based on the idea that of the Fed pivot. The funny thing is, the Fed, I don't know where the Fed pivot talk actually started, but and I'm losing track of where they started hiking rates and all that stuff, but that was probably back over here. This weakness, Fed's on a rate hike cycle. But anyway, long story short, more recently, over the past 6 months or whatever, I've been talking about this trend line and how this current rally has a lot of similarities to this one. And the other day I counted the months that it basically, rallied here before it broke that trend line, and we're just a couple of months shy of that. 2 or 3 months shy of the duration of this particular rally here, but you can see that this trend line has been broken decisively, and if that's not a caution flag, I don't know what is. And so here's the interesting thing, and I was studying this yesterday. So you look at the trend line break back over here, big red candle, and then look at the subsequent sort of price action, right? And the eventual low. And so you look at the current price action and you wonder if you're going to see something similar. And if that's the case, well then we're in for a bumpy rest of the year. So that's something to look at and ponder carefully. And obviously, the price action is not going to manifest in the exact same way as it did back over here, but it's a decent little sort of guidepost, right? And so now, I'm going to be keeping my eye out for, like what the price action looks like from here. And if for some reason we're able to rally back up over this trend line, and nothing happens quick on a weekly chart, right? So the other thing to look at is the fact that we've lost this major support here, right? And you can see last week, like I've had this drawn on here for ages, since like back over here, like literally last fall. Once we sort of got this level here, right? And it's pretty obvious, that little zone right there, it was major resistance and then it became major support. And so the fact that last week, that support held, and a lot of people looked at, the weekly chart last week and thought, oh man, you had this three red soldiers, or whatever you call them, three black crows. That's what it is. It's three white soldiers or three red black crows. But anyway, so looking at the candlestick, you could have thought last week, well, geez, we retested that huge area of support and rallied off of it, so we're probably due for a rally. And you can see how this week's coming along so far. And of course, it wouldn't surprise me to see a little bit of a rally here, but it seems like in the background, it seems like there's distribution is going on. And of course, prior weeks I've been talking about, for weeks and weeks and probably months, I've been talking about how the market itself is historically overvalued, has been historically overvalued by literally every possible metric that exists, right? And we've talked at length about that. And so, a little 10% correction or whatever doesn't really resolve that. And of course, you throw these tariffs into the mix. I'm looking at CNBC. 25% tariffs on steel and aluminum take effect now. So the funny thing is that, and I talked about this probably last week, and over the years I've been doing this. We have been doing this show in a certain capacity since probably, I'm gonna say, probably 20 years now. somewhere between 15 and 20 years in some capacity we have been doing a live show. We used to call it a radio show, and we used to do it on Wednesday nights. It was me and Doug and Jeffrey for a while there, and then Doug and I used to do a daily show of 2 or 3 times a week and that. So, but anyway, so everything that I kind of reiterate or whatever has been covered in the past, and I'm sure you guys have all heard it, but a lot of stuff is still relevant. Everything, especially with economics, is relevant, and there's nothing new under the sun, as they say. Although there is actually some new stuff out there under the sun. But real quick, I didn't want to spend so much time on this, but here's the thing: is this is a pretty viable trend line. To me, this is like sort of the primary uptrend. This trend line, however you want to draw it, there's different ways to draw it. This very first chart here on this daily, hang on, one of these charts. Yeah, maybe I deleted it. This is what I was looking for. Yeah, so I had this little trend line sort of drawn, and I had the all-time highs drawn up here. But yeah, I mean, so there's tons of ways to draw trend lines, but no matter how you draw it, no matter how you draw your trend lines, they're basically all getting violated now, other than this one, which I'd consider to be the primary trend. So if you think about it, as the market sort of, pulled away from this reasonable angle primary trend line, it got more overvalued and more overvalued and more overvalued, right? And then you got, just crazy price to sales metrics, and companies that are doing, millions of dollars in business are valued at tens of billions of dollars. And so that's always sort of been the thing for me, is like market cap. Like, you look at the market cap of a lot of these companies, and it's just insane compared to what their profits are in their business and that, and PEs, and it's like everybody lost sight of valuations. And of course, you got the whole AI thing, but there's some real damage out there. Oh man, I mean, there's some, Microsoft's been one of those stocks that I kind of thought was, especially like this pullback, and this was looking good, but you can see it's violated these lows. Funny thing about the market, most people don't realize this, and these are weekly charts, right? Back in the old days, I would always forget. I'd think, I don't want all this garbage up here at the top of the screen. Let's just look at the chart. But then you couldn't tell if I was on a daily or weekly. So, but anyway, my point here is that I mean, some of these stocks, when the market pulls back 10%, your typical stock pulls back 20-30%, and that's just how it works. A lot of people don't realize that. You can say, market 10% correction, which is, reasonable if you're indexing into the, indexing, just buying index funds or whatever. But look at this sell-off in Apple. And so, I mean, a lot of these stocks, the Mag 7, these pullbacks are extremely significant, and of course, I mean, Google's got, the thing of it is, people don't have a lot of patience. When you get a quick sell-off like we've seen here, all you hear is buy the dip, this is a good buying opportunity, people coming on CNBC and this and that. But the last time that Google sold down here, right, it took some time to sort of carve out a bottom and then go back up. And so, and I'm just off the cuff reiterating the idea that the same thing's going to happen here. I mean, in theory, you could maybe buy this dip here or whatever, but it's going to take some time. And going back to what I said before, right? If I drew that little thing and said, if you're looking to invest in a stock because, this is a good buying opportunity, and people are, fund managers have cash on the sidelines or whatever, but that little rule of thumb that I was talking about, until you get a closing price bar that closes over the high and even that's no guarantee. Like, look at this, right? So you got this big sell off, and then, that week looks like a huge gap down and rally. And then this little doji here was, weekly close over the high of the previous week. That still didn't mark the low of the sell off, right? And so it doesn't always work, but at the same time, it will prevent you. Look at Nvidia here. It will at least prevent you from buying prematurely. So let's look at, I'm out of time here. Look at ARK, right? ARK was on the comeback trail, and then, as they say, risk happens fast. So, and yeah, I got a bunch of, I've pared down my watch list here. Tesla has had just an incredible sell-off. But, when you put it in the context of other sell-offs, I like to look for symmetry on the charts. And so, these big hump patterns or whatever you call them, they appear on the charts, and they're either U's, like you see the U pattern after a sell-off, or you see like the big exaggerated hump where the stock rallies and then comes all the way back and finds support sort of where it started. But the thing about it is it was almost $500, and and it was below 250. So you're talking about a stock losing half of its value in a very short amount of time. And this is just sort of an extreme example, but at the same time, there's a lot of devastation just all over the place. And so, what was the one that? Oh yeah. So these super hot stocks. These stocks that get these parabolic moves. And you can see that there's always dip buyers, right? This is one of those sort of hot stocks here or whatever. And the funny thing is, I remember people being bullish on this stock years ago. And so, they've done very well. But, you get something like this, and then there's people that are waiting for, this type of a pullback to get in. But this thing is volatile as all get out. So, you can see. And so, my point is, market pulls back 10%, stocks pull back 20, 30, 40%. And that's just how it is with individual stocks. And so everyone's always trying to catch the bottom and catch the lows. And a lot of times they have to get shaken. That's why the weekly charts tell me a much better story than the daily charts, to be honest with you. Daily charts anymore, there's a lot of noise to them. It's kind of like, the ES futures. 1 minute charts are just noise, but 5-minute charts, are a better picture. And then of course the further out you expand your time scale, the better off you are, the cleaner the charts look. So, weekly charts on individual stocks and the indexes are typically the best gauge. So, I will tell you this. And there's always the prior week's high, right? Obviously it doesn't always work, but it's one of the laws of nature. It's a I should say law of physics, is that the market can't get back to the high until it gets over the previous day or the previous week's high. So anyway, CPI day, I didn't really get to look at a whole bunch of stuff, but I think you get the idea. So anyways, be cautious here. Market's potentially due for a little end of the week bounce here, but is the sell-off over? Well, who knows? This past Friday, everybody thought that was it. The sell-off was over, and then we're considerably lower at this point. And so, extremely stretched to the downside, probably due for a bounce, but only time is going to sort of heal this. And then, of course, if we are headed into a recession, then who knows? Market could go a lot lower. So anyways, thanks for tuning in. I'll see you back here same time next week.